Our first session focuses on audit strategy document. What does it mean in real life? I'll request C. Nilanjan Paul, partner BDO, to please come on the dais. It's my pleasure to introduce our first speaker for the day, C. Nilanjan Paul. I'll request a big round of applause, please. Mr. Nilanjan Paul is a chartered accountant with deep expertise in financial reporting and corporate laws. He promotes audit quality, supports capacity building for the Indian corporate law services, and serves as a special invitee to ICI's ASB. A recognized thought leader, he regularly publishes influential professional viewpoints nationwide. Thank you, sir, for being here. I'll now request, sir, to please kindly take the floor.
So good morning, everyone, and thank you, NFRA and the Association of Corporate Advisors for having me here. It's really great and encouraging to see so many professionals on a Saturday morning in Calcutta. Really very encouraging. I would also hope, considering the first sessions, the level of energy will be high, and we will expect more of a knowledge sharing and a discussion rather than the typical, a monologue type of session. So I have been given an hour or so, but primarily we will talk about the very first step of any engagement that you would have been executing, right? Please feel free to stop me, ask questions, clarify. We are also here to learn from you. And let's have a more engaging and engaging session. Okay? So roughly, this is what we will discuss today. The focus would also be on the NFRA sample document on the audit strategy. In case you've had not been the chance to go through it, my request and my request to all of you would be to please go through that document. It's a wonderful piece of a document which will tell you how to have the baseline expectations from an audit strategy standpoint. We'll also have some case studies, some, again, an opportunity to engage into some dialogue, and then we'll end up with some good practices. Okay? So let me open this topic with this headline. Audits without a strategy is just expensive guesswork. So as you reflect when you see this headline, let me repeat this one more time. Audits without a strategy are just expensive guesswork. Do you all agree? Any thoughts? Can we have some mics there also, please? Any thoughts, anyone? What do you think when you see this headline on the screen? Do you agree, disagree, partially agree? Partially? So why do you say that, sir? Yeah. Sure. Sure.
So I don't think everything is missing.
Yeah.
But it has to be more focused from the changing environment and expectation.
Sure, sir. But if you don't know which way to head, will it be appropriate to say that I'll be reaching the destination which is expected, maybe from a societal expectation or from the expectation of the regulators? If you know where to go, or rather if you don't know where to go, will the destination that we will reach is what is expected? Right. Any thoughts, anyone? Okay. But why do we need to do a strategy, first of all? Is there somebody or something which will tell us to do a strategy? I thought Saturday morning, first session. Yeah, please. Audit plan. Okay. 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 So is there something which tells us to do some kind of a strategy?
It's basically standards on auditing, which are the guidelines.
Okay.
Basically, how to go about this entire thing, including risk of material misstatements, strategy, planning. right from the very beginning, the financial statements are before us, or
Sure.
even before the engagement is taken
Sure.
up altogether.
Yeah.
So there's an entire guidelines and rules and strategies over there in the standards of auditing.
Okay. So, so there's some literature which will, if I can use the word, compel us to do some kind of a strategy thing, right? But does this have has its own benefits? Is that Sir also mentioned that he partially agrees to this statement, but something is it beneficial when you do on the ground and work?
The element of risk. Yeah, here. Here.
Yeah, yeah.
This end. On your left.
Sorry, yeah.
Yeah.
Aye.
Hi. So does the element of risk that we try to cover here,
Yeah.
so which is the benchmark or the yardstick which is going to guide us through this process.
Yeah.
So the very idea of strategizing is to see to that the different kinds of risks are covered in the audit process.
So if I have to sum up, then it is a audit standard, something to do with risk of material misstatement and risk identification, right? And somebody also talked about a plan, right? But I think we are even one step before audit plan, right? We are talking about this, what and why. We are not into the phase of actually writing down what you would be doing to achieve the objective. So we are still at the fact-finding stage. That's what strategy is, right? And a couple of the comments that I hear from this room is there on the slide. We have a standard on auditing SA 300, which will tell you to have a mandatory working paper on audit strategy, right? It also helps us to understand what has changed as compared to the last year's audit if you are a continuing auditor. If you are a first-time auditor, possibly you would need to have a much more deeper discussion when you are doing an audit strategy phase. It also pulls the team together. We don't work in silos. If you have an initial strategy meeting or strategy discussion, you know where the entire engagement should head. So all the team members that you have will work together to reach that outcome, right? And obviously when you respond and discuss with management or with those charged with governance, they would also expect the auditor to keep them posted about the strategies that they are using for this particular audit, right? So it's a wholesome kind of experience and a strategy stage which will give the auditor as well as the entity to have a very robust financial reporting. Yep. Again, if I have to pick up from the NFRA sample document, wonderfully laid and wonderfully worked out document, it will primarily cover these 3 or 4 boxes: planning meetings, understanding the entity and its operations, materiality, we'll spend some time about that also, and most importantly, if you are working in a group audit scenario, that's what this document will lay this out. Okay? Planning meetings. Yeah. I think if you would look at all the regulatory inspections, be it in India or be it globally as well, the most underrated part of a strategy framing is a discussion. Now, the discussion can happen within the team, the discussion can happen with the management, right? But as you know, that if you discuss with a group of people, you would get to know more on a collective basis. So when you're having a discussion with the engagement team, or when you are having a discussion with the management or those charged with governance, they would obviously be giving you a bit more extra for you to consider in your audit strategy, right? So please, in your audits, it is the fundamental need, again, coming from SA 300, to engage into a very clear-cut dialogue between the team as well as the management and those charged with governance. Okay? So what does this do basically? It does say what has changed from last year, right? From a team perspective, we don't work in silos. We work together. If there is a change, because as We know the audit teams might be fungible. They would be working in one set of clients. They will be going to another set of clients. So there would obviously be a discussion or a much more robust engagement team if you are sharing those experiences or good practices in other clients. Milestones, right? You also need to discuss the fee part, the deliverables, the timelines. That also helps to avoid, a discussion and also to avoid a last-minute surprises, right? Improves documentation, because ultimately, whatever you're going to document or execute will flow from this stage. So if you would know, as I said, where to head, probably you would be knowing what to also document. And as I said, this is also an area which would require your communication to those charged with governance. The NFRA has also issued the two-way communication between the auditors and those charged with governance. There are also auditors and audit community interaction series, which also highlights the importance of a discussion or communication at audit strategy stage. Yeah. So this is just a snapshot, right? But again, what I just said is possibly written and it is prepared in the form of a work paper, right? For you to appreciate how some baseline documentation should be. These are not supposed to be a rule-based kind of a document, but it should be used and customized in your particular engagements. Okay? Understanding the entity, quickly, it would cover at a strategy stage 3 things: operating environment, internal controls, and accounting matters. Right? So if I were to talk about operations, probably you will need to go and inquire what has changed from a market perspective, economy perspective, or from a regulation perspective, right? So for example, we heard some kind of a verdict in the US market yesterday night. Here also we are having the aftermaths possibly of some restrictions in India. How will that affect your particular client is a point that you might need to discuss. Regulatory changes, we are seeing much more stronger and newer regulations that is coming up, right? We are having this AI summit in Delhi. Is there a client that is affected towards those regulations that we need to consider? Accounting matters, I think we are more or less aware of these changes from an accounting standard perspective, or if there are certain interpretations which the local regulatory body or something on international level will affect a particular client, that might be of relevance. Internal controls. I want to focus some time on internal controls. Generally, the discussion which goes on internal controls, यार कुछ change हुआ है क्या last year से? The answer is no. नहीं हुआ है change. But I think the way we have to look at internal controls is a mid of these two boxes, which is there on the screen. If something is changing from an economic standpoint, if something your business strategy and objectives are changing, how come your internal controls are the same, right? And we'll have one or two case studies to explain what I mean. But what I'm trying to tell you is that internal control possibly has not yet gathered the amount of prominence as the first page of the audit report is, which is on the true and fair view. I think we're more used to writing true and fair view reports rather than also focusing on the bottom, which is basically the controls which will lead to a better financial statements, right? So I think internal controls, it can't be that it has not changed, right? And if you still get a response that it has not changed, possibly you need to ask much more right and much more probing questions, right? But internal controls in this environment, as I see personally, has to be agile to what is happening in the business or the entity. Yeah. Okay. So let me ask a question. What are the two regulatory changes that you think you would be asking when you go for your upcoming audits? what are those top 2 regulatory changes that you might need to consider? Sorry? Okay. Anything else? Sorry, sir? Okay. Okay. So, yeah. 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 Right. Right. Sure.
Because otherwise we all know
Yeah.
how we proceed.
Right,
I can
right.
remember my student days, one instant, a medium, I said not even medium, small firm came.
Sure, sir.
I have to interact with him. I said, sir, ye aisa hai. I sent him. He did it. Next year, the promoters had a very big company,
Yeah.
such a thick audit manual, program plan. At the 30% level, some clarification was given.
Yeah.
Accepted it.
Yeah.
While they were coming to 70-80% of the audit completion, the same questions were put in a different way.
Yeah.
The audit program was designed in such a way.
Yeah.
At that stage, the team has to say, "Abhi jhoot bolna band karna padega." One has to confess, "Kid, sir, this has happened. Will not repeat. We have done something wrong."
Yeah.
So this is what is required. And then management, the industry should be prepared because the kind of money we are paying. I was the chairman of an audit committee in a very big company. Some 5 audit firm came.
Sure.
I being a chairman of the audit committee, I say, this 7.5 lakh रुपए में 5 जने audit करेंगे इतने सारे plant में. I mean, what kind of audit they'll do?
Sure.
I sent back. I say, ask them that don't send the article clerk. We need the qualified people who understand, experienced people to do this.
Sure.
Even then, I said the company is earning 4,000, 5,000 crore and we don't want to spend properly. Then they came with another 2-3 lakhs, 10 lakhs. So somewhere the industry has to be conveyed. This is a compliance cost. This is for your benefit. The more you go in detail, the more you will get the benefit of it. And entire the system in the country, which the chairman conveyed. I mean, we are looking now 140 crore.
Yeah.
Now, what used to happen in your Manhattan, the Canary Wharf will come to know after 1 day. Bombay will come to know after 1 hour. A week. Calcutta will come to know after two months.
Sure.
Today, a person sitting in Jhumri Talaiya, he also sees the product and the services. He says, "Hamar paas paisa ho, hum yu kinbo." This is what the changes are happening.
Sure.
So I believe I've conveyed.
No, so thank you very much for your comment. But I do agree. I think the labor law and budget, I think, would be a common question which I would expect all of you to ask. But why is that? Why is labor code so important? Not a very accurate kind of figure, but roughly this is how the press is painting it at this particular point in time. If you would look at Nifty 50 entities, we had 13,000 crores being recognized as a one-time cost on social security benefits, right? It is not a small number, right? Roughly, this has dipped the PBT by 9%. So these are just top Nifty 50 entities of this country, right? Imagine the questions or the discussions that you need to have when you look at the next level of entities. Yeah? Budgets, right? We had a very stringent restriction on carry forward of MAT credits, right? Is that something from an accounting perspective it will change, right? We also had some tax holidays for data centers being set up in India. How is going to pan out your deferred tax computations, right? Or something that we might need to discuss and consider in this year's audit. So this is again a snapshot of what the document is. If you would look at, the document very clearly covers accounting changes, internal controls, as well as the understanding of the entity. Yeah? Materiality. I think the favorite topic of all auditors, materiality. Okay? PBT is the by default benchmark, right? Generally, if I can have some raise of hand, is generally PBT is the benchmark. Okay. So I would again reflect and assess that is it the right benchmark. materiality is to be looked at from the point of view of the user. Okay? It is not just an audit materiality. What we're trying to tell us through this exercise is that what is that one number or one item in the financial statements which will generally be used by all users of financial statements to understand the financial statements. So it is from a user's perspective, right? It is generally expected that for a profit-oriented entity or a profit-making entity, a profit before tax would be a general kind of a benchmark. But again, is that the correct benchmark for an entity which is in a startup phase or an entity which is involving into significant capex is a consideration that you might need to look at. Again, the auditing standards doesn't mandate a particular benchmark, but it gives this questions before you identify an appropriate benchmark. Now, after you have identified that benchmark, what next? How do you convert that benchmark into a number? We had 3 stages or 3 levels, as I can say: overall materiality, performance materiality, and a clearly trivial thresholds, or CTT as we call it, right? So if I have to split this very, very simply, any misstatement which is above your overall materiality is by default a problem statement. We need to address this somewhere in our audit report. Now again, internationally also, and even in India, there is no bright line threshold, right? But again, there are various firms, there are global practices, regulators, they have given some kind of a benchmark. So if you would look at the overall materiality, it is generally within the range of 3 to 10% if you're looking at profit, or a revenue from a 0.5 to 3%. Again, these are just examples. It's a range, as I said. It is not, I have to choose either the beginning or at the end of the spectrum. You need to decide what is that cutoff point you need to have. Similarly, performance materiality. But if you have a materiality, why do you need to have performance materiality? The idea is, let's use a lower number, so that even though your procedures and there's something wrong somewhere, your possible misstatement will be still within the acceptable range. So you might have an overall materiality, but you perform audit at a performance materiality level. Again, typically 50 to 75% is what we use to compute and performance materiality. Yeah. So again, when these documents were being published or being worked on, what we also looked at are the international best practices. What we felt, yeah, sorry, sir, please.
Say, add a little bit what Nilanjan said. Say, for example, you might be wondering, we all determined this materiality, performance materiality and all, but what is the use of it? How is it what use it's going to make? In subsequent 2-3 sessions, you will be able to see that what is the use of those items, how important those are. These are not just the documents which you prepare at the beginning and just close your eyes and go away. That's what I wanted to mention to you.
Thank you, sir. Group audits, right? Specifically, what we would need to at least discuss and understand, how are my components changing as compared to my last year's audit, right? So the same rigor or same consideration that you apply for an entity, you would be expected to apply to other components also. Now that rigor, that work can be directly by you if you are also the auditors, but if you're using the work of other practitioner or other chartered accountants, I think there is absolute clarity that this is also a continued responsibility of the principal auditor. This is not a delegated responsibility. It is not a mechanical reliance that we're going to place on the work of someone else. We would need to ask those questions to the principal, to the component auditors as well, before we frame a group strategy. So again, similarly, understanding of business, internal controls, some controls which are prevalent for the entire group that we would need to look at. Scope and coverage, I just want to spend a few seconds on that. Scope and coverage, we have seen instances where people argue that yes, ये तो listed entity है, 80% is सभी बोलता है करने के लिए audit, right? 20% can still be unaudited. I don't think that's the right expectation. When you are looking at a threshold, that is a bare minimum threshold. Ultimately, it is the principal auditor's judgment to see how much he can accept as an unaudited portion, right? 80% or this 20% rule is just a perspective or a baseline expectation from SEBI. It is not a finish line. You will still need to look at the unaudited portion and see whether there is a possibility of audit risk. Yeah. So this is how this document also looks at. I think what is very interesting in this document is the right column, right? Whether it should be scoped in or scoped out, right? So there are various considerations, specifically the considerations on the operations of that particular component. So for example, if you are having a very large group, one of the very material component is a financial services entity. Possibly your risks and your discussion points would be completely different, right? And ultimately, then we land up to this stage, which is called preliminary risk assessment. So from this point onwards, you have an audit plan that you execute. All these are fact-finding exercises to initiate an audit plan, right? Okay, so I think we have some more time. So let's have some discussions. So we'll have few case studies, and please feel free to engage and discuss. We're talking about an entity. It's a mid-sized company. Now the business model underwent a change, right? It was primarily domestic oriented. Now it is being, they're changing the strategy. They will be more export oriented. So a typical auditor, he is the continuing auditor. They went and they asked management. They relied on their explanation, and they did some preliminary, discussions and preliminary chai pe charcha, if I can say that, right? And the management also mentioned, the margins have increased because it is now export oriented. The markets are much more favorable, right? And the auditor also kind of looked at from a shipping document to see that actually there has been a increased sale in the export market, so they are not just domestic driven. And they said that it looks like ठीक है यार, ठीक ठाक लग रहा है अभी. Is there something wrong in these two boxes? Last one. Okay. Why do you say that, sir?
Lower.
Okay. But if I have to argue from the point of view of the management, okay, sir, it's my first time intrusion in this market. I don't know how that market is, right? I'm new. So won't I expect my acceptability of my product to go down in the initial years, and hence more or less we're in the same range of returns the way we have in domestic market.
But in case of exports, before the metals are sent to outside countries,
Okay.
they are being verified by the different authorized inspecting
Sure.
agencies.
Sure.
So naturally, there are lesser chances of returns.
Yeah, fair point. So it's a lesser chance of a return. Any other thoughts, anyone? Is it all okay, or something is missing? Yes, sir.
Metals are being exported. Which other countries metals are going to be exported?
Let's say, sir, the European market.
No,
They are very good in that green tag, right? So they don't want something which is not sustainable to come in the market. So let's assume that.
Okay. No, if it is European countries, then it is okay.
Okay.
But if it is other than Bangladesh or Pakistan or something like that,
Okay.
there could be a
Okay.
issue.
Okay.
Okay.
Any thoughts, anyone?
Yeah, I think one has to look here.
Sorry, sir. Yeah.
Look for export policies and foreign exchange
Sure.
impact.
Sure.
That is the change which has.
Yeah. Credit risk. Okay. So ultimately, what we all think is that something more has to be done, right? It can't be कि what was done. Yeah, 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 yeah.
Sir, it is not determined whether this way, sir. Sir, this is not determined whether LC has been opened or not, or it is given on credit. So that point is missing.
Sir, अभी मैं strategy stage में हूँ, मैं तो बस पूछ ही रहा हूँ उससे, एकदम पूछ रहा हूँ उससे. So, sir, I think the whole idea, and I'm glad to have those inputs, is that something has to be done more. And very rightly, what sir also mentioned, that it can't merely be based on inquiries. Generally, what we have also seen, and if you would see those small boxes in the slides below, the inspections or the orders also mention that there has to be some more, degree of rigor rather than just asking questions. We would need to possibly validate what those things are saying. We're not saying that you go and do a 100% audit. We don't pick up samples and do that at that stage. But at least, like, in controls, we do a walkthrough. Why do you do a walkthrough? To understand or corroborate that there is no communication gap. Possibly what he is explaining and what I'm understanding, there is a gap. So the evidence checking helps you to mitigate that risk. So in this particular slide, what we're trying to tell you is that it can't just be merely be an inquiry. There has to be some more rigor. Walkthroughs are very commonly used to, to mitigate these kind of risks.
Yeah. Nilanjan,
Yes, sir.
one more point people can actually keep in mind. This is where the question of professional skepticism and inquiring mind comes into. Like he said very rightly, management normally gives an answer. I'm the first, this is the first business I'm doing, how do you expect me to know, things like that. But the question should be, you are a businessman, you want to enter into a new market, you must have done some study, isn't it? In that process, you must have considered what are the likelihood of the risk of a return of materials, is it going to be acceptable there? So, without doing that, if you are entering some markets, etc., then probably there is another risk which actually, maybe larger business risk which will be there. That also should lead us to a, more extensive testing in the subsequent stages. Otherwise, one of the questions could be that, what is your business strategy? You must have done some study before that. So that's also a point which...
Sure, sir. Fair point, sir. Okay. Let's go to the next question. It's a listed company. It is in the auto sector. Financials are very, very strong, very robust, stable business revenue, profitability. The performance is aligned with this sector, rather they are the sector lead. Now, working capital being in the auto sector, they have tried to use new working capital management tool, and they have gone for let's say bill discounting. I know the slide talks about reverse factoring, but let's talk about, let's say it's a bill discounting. It's a much more common kind of an instrument. That's a change that has happened from last year. Let's say what we did. I am the auditor for 5 years. I am very happy with the management. Yeah, 5 saal se hai, there is no misstatement, fees are good, board is excellent, right? And in my judgment, I feel that there is a very, very low risk client. I know this client, I know the client from my childhood days, all those things. So what I did, I carry forwarded the audit strategy what I did last year. Okay? Because in my mind, I had this impression that largely the business has remained same. I know the business very well, and why not just use the strategy what we did last time. Okay, it's efficient, right? Any reactions? Personal bias, okay. Okay, sir. Okay.
Or budget and so on. So we need to change our strategy. We need to review our strategy afresh.
But sir, change करके भी तो मैं यहीं पे पहुँचूँगा. But there is no change, sir.
And secondly, it is always advisable to change the engagement team also, because as he said, that if the same team continues, they are I mean, relaxed that since they know the firm very well, so everything is already all right in their mind. So it may.
सर लोग ही नहीं आना चाहते सर ऑडिट में सर अभी तो टीम कहाँ से होगी लोग ही नहीं आना चाहते सर and sir please don't mind me this is exactly the reactions when we what we get when we go and ask this questions कि यार last time भी तो आपने वही same चीज पूछे थे यार no change.
Now, of course, the management will always reply like this, but we have to tackle the question in the right perspective. Because if this was the last time we to apne audit karaya tha, since I am going to audit again, so naturally I will be repeating the same things.
Fair point, sir. Okay. Oh my God, I am in the 4th year. Chalo. I am the new engagement partner. The old partner has left. I am the new engagement partner. The firm policy says that the engagement partner should rotate every 5 years. I'm in the 4th year.
So ideally, audit strategy needs to be reviewed every year, as said by sir also.
Okay.
It needs to be reviewed. That needs to be revisited.
Sure.
So definitely, it cannot be that in audit strategy there will be no change in 1 year time. That is very rare. That doesn't happen actually. So we need to revisit the audit strategy definitely, and during making of audit strategy or revising it, so we need to look into all the criticalities or business developments which have happened.
Sure,
it cannot
sure.
be just a straight line in both the years. Generally, it doesn't happen that way.
Sure.
Yeah.
I think the gentleman behind you. Yeah.
In this case, I believe there is a familiarity threat which will happen if the auditor just rely upon the audit strategy which was there in the last year, or roll forwarding of the audit strategy of the previous year. Although the standard allow us to use the audit strategy of the previous year, but it also says that we should revisit our strategy and reassess the entire risk, and should not just close our eyes and do a roll forward. So we have to do a proper walkthrough and all the audit procedures which has been specified in the standards on auditing, and do a proper assessment.
Sure. I think bang on. I think we all are bang on to say that it can't be a carry forward. It can't be a clone and copy of what we did last time, right? And I think my famous, my favorite word, Sally, S-A-L-Y, same as last year, right? It's not a friend that we want to have, same as last year. It has to. We need to make new friends, right? We need to have this strategy being customized for the current year's audit. We might be using it, we might be leveraging it, right? We may have tested 10 samples last year. We don't carry forward those 10 samples, right? We have tested statutory dues last year. We take great pride in writing that clause in CARO, company is generally regular in payment of statutory dues, right? If that is not changing, right, why should my strategy not change, right? So I think the point which I want to make is on the first box, last bullet. When we changed from an existing model to a bill discounting model, is there a new accounting change that we need to consider? Indians have this concept of supply chain issues, right? Or a supplier finance arrangement. Does this trigger an accounting change, right? Is a question that we need to have. We're in auto, right? Now the regulation in India says that the vehicles which have reached the end of life, they have to be taken back in a particular way. Okay, an extended producer responsibility, which was there maybe for plastics, for batteries, e-waste. Now it is there for auto as well. So my strategy obviously cannot be same because my environment in which I'm operating has changed. Okay, if you would look at the first box on the left, there had been observations where it is a blind carry forward of strategies, right? It is, as I said, it is expensive, right? Audit is not on an autopilot mode. It is expensive if you are not reiterating or revisiting our strategies and customizing it to the current year's audit. Yeah. I think there was also talk about fees. There was also an observation that because inappropriate documentation was maintained, and the argument was the fee was quite low. So I don't think it works when we are in an audit kind of a activity. Yep. Okay. Let's talk about an unlisted, closely held company. There is a new investor which has come, right? They have appointed directors. They have a very stringent clause on loan covenants. They say that if you breach this covenant, the loan and everything becomes immediately repayable. The company is involving into a significant amount of capex. Yeah. Let's see what we did. Now, I use my typical audit methodology. I said, yeah, 0.5, say 3% tak to hai, right? I am the first year auditor also. I have experience in other set of companies. Let's take 3%. Yeah. There was, when they were discussing with the management, they also, based on their analytics and all those, they felt that there is, a small under accrual of interest. Yeah. But since it was below my, very, very well below my materiality thresholds, I chose to ignore that. Right? Is there something wrong? Sorry. The answer is there. Something wrong? So 3 factors. First time client, high level materiality, and a very small amount of interest accrual.
So in this case, as it is the first year as audit,
yeah.
Considering a 3% of materiality of benchmarking revenue,
sure.
So that need to be revisited,
okay.
Because the auditor does not have any past experience of auditing that entity. So they don't know the entity and its environment, internal controls.
Sure.
So that is one of the risks which the auditor will carry in
sure.
if they
sure.
consider
sure.
3%. Secondly, the interest accrual, as it says that the financial covenant, which is interest coverage ratio, would trigger immediate repayment.
Sure.
And my this coverage ratio, one of the factor is the interest. So if there is a lower accrual of the interest, that that may lead to the covenant may not get breached because of that. Interest not getting accrued,
yeah.
So that need to be taken care. So these are the 2 things which I feel means as an auditor we should take care of.
Yeah. So I think the last point that you made was very, very relevant, right? If yeah, sorry.
Since we are taking loan, so the person giving the loan, what its source, it must also be verified.
Whose source?
Yes, the
okay.
source of providing the fund, it
okay.
must also be verified this source is genuine or not, the fund we are taking
okay.
from the person.
Okay, okay, fair point. But I think the points someone made on the interest accrual, apparently it's a no problem area, right? Because it's a small interest, not provided for. It is well below my CTT. So everything is good. But what is very rightly mentioned, that because of this, even a small under accrual, I might be breaching a very important loan covenant. Right? So again, the moot point is that, as I said, the audit is not an autopilot. You have to look at the evidence, look at in that particular year, and then define the path that you would need to go. Possibly, this would not be an area of concern where I am at a very, very large scale, profitable entity, right? The size of capex are not that huge as compared to the overall size of the entity. So my response would differ. But in this particular fact pattern, even though there is an expected immaterial misstatement, that might require a very rigorous consideration from a loan covenant perspective, because then everything changes. Is whether my current non-current classification is appropriate is something that we might need to look at. Will this also affect my going concern, right? If I have to pay this loan back immediately, do I have enough funds, or is this raising a doubt on the continuance of the entity as a going concern are factors we need to consider. So again, my only submission on this slide is don't ignore a misstatement only because it is not material. Is something linked to that misstatement what we need to delve deeper? Yeah. So couple of regulatory observations also. I think the one in the middle, which is talking about documentation of a materiality benchmark, I think that we need to look at very, very carefully. We can't just say that it is PBT, but why PBT? Yeah. Okay, probably last one or two slides. Again, a strong, healthy company, always profitable. In the current year, they have impaired goodwill. Okay. Now, because of this, they believe that there will be a marginal profit which is there in the current year. So historically, very, very profitable. Current year, goodwill impairment, I am at the borderline. Yeah. Again, typical auditors for last 5 years. Materiality, since we have always used PBT, we have used PBT in the current year as well, right? But what I felt is that, यार वो ना number match नहीं कर रहा है. अभी तो profit number has gone down, right? So why don't I shift from, I change my benchmark itself. From a PBT, I shift it to revenue and I meet that same number, right? Is that okay? Entity same है, profitable पहले भी था आज भी है, all fine, right? Number, materiality remains the same. Is that a win-win situation? Sorry, sir? Impairment was as per Ind AS, yes. Yeah, yeah. क्यों यार, number तो same ही है यार.
It should not be like we will change it year on year. So ideally in this particular case, since there is an impairment of goodwill, so that is one area definitely which will be a significant raise, and we need to understand why that impairment of goodwill has happened. Okay. But as regards the maturity, we should ideally see that why this benchmark has been changed. It should not be changed ideally. Okay. Unless and until there is a strong reason for it.
Let me flip the question back to you. Can I attain the same outcome by doing something else?
No, outcome may be same, but we have to have justification of what we are doing.
Okay.
So as auditors, we need to have the basis of everything.
So is there a consensus that, sorry, sir, yeah.
The asset benchmark is basically considered as a denominator. So denominator in the later year is lower. So the materiality, if it comes at the same number, so it tells a different story. That's
Sure.
the case.
Yeah, one point.
But whatever I did, I tried to match the same number, यार. वो चलो वो मान के चलते हैं.
So
Sorry.
materiality should not necessarily be quantitative. It should be qualitative.
Okay. But I am still finding, no.
No.
I have not even found my materiality. I am saying what is the base I should use to find a materiality.
So that is the qualitative basis. No,
Yep.
you end up with the same value of materiality is the material.
Okay. So is
Cannot be the benchmark, nor is the amount of the assets.
Sure.
It should be rather better to set the materiality based on the turnover.
Okay. Okay.
Because my main thrust should be why did the profits gone significantly down this year, since there is a history of continuous healthy profits all through.
Sir, impairment wise, I had a significant business combination, past 10 years, it was not working. I wrote that good. Yeah, sir, let me respond the way management will. ये तो सर आप ही ने बताया था last time audit के fees audit के time पे कि यार goodwill को ना impairment करो. तो मैंने कर दिया इस बार.
I think the benchmark shouldn't
Gross
be
profit. Okay. What is gross profit? Okay? 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 Okay?
The benchmark shouldn't be changed here. I'm here. Because we usually see materiality as we are discussing from the users of the financial statement perspective.
Sure.
So here, just because impairment is there, the perspective to see the financial statement for the user will never change because the business model is still the same. So from that angle, if I'm changing the benchmark, I don't have a very cognate reason why I will change the benchmark. It should be PBT only, which was there consistently for the last year. And the profit is not very volatile because of the business, I would say. It's a one-off event which is affecting the profit. So the benchmark should be the same as it was last year.
So I think bang on. I think you have mentioned it absolutely right. It is materiality is from the perspective of the user, right? But what I also wanted to tell you is that materiality is not just a number game. We are not supposed to fix a particular number or a particular benchmark. Now what happens is that if we change the benchmark itself, what we're trying to say is that there are other considerations that we need to look at from a user standpoint. If I am a profit-oriented entity and a profit was the prime focus of investor last year, probably a 5% change of profit could have irked the investors to ask questions. But if I have to look at it from an asset or from a revenue perspective, the way the users I'm expecting them to look at, that perspective itself change, right? Which means that there could be newer risks or newer considerations which we might need to factor, right? But very rightly put out, it is the perspective of the users, right? It can't be just fixing up a particular number. I think I also mentioned that can we reach the same outcome? I think the standards on auditing are very clear and flexible to say that if you are having one-off adjustments and you actually believe they are one-off adjustment, please ignore them when you are computing a benchmark, right? So I don't need to shift my basis itself, right? But use this flexibility in the standard to avoid aberrations. Yeah? Okay, possibly the last slide. Let's talk about a group situation, right? Where there has been an entity, there has been a foreign subsidiary, uh, there has been a decline in revenue in that subsidiary, there is an increase in cost. In the current year also, there was a reduction of sales, volumes, margins, and everything. There was also some loss of key customers. Okay, that's what the entity told the principal auditor and also the component auditor. So what did I do as the principal auditor? Typical, I sent out a group instructions and asked for few informations. The subsidiary auditor also concurred, yes, the situation is not looking good. They're still continuing to have, losses. What I did, I used that and I prepared a group audit summary strategy memorandum. Anything wrong in this? Yep.
Yeah. There is a risk, means fraud risk factor because of negative impact.
Sorry?
Fraud risk factors.
For risk factors? Fraud risk factors because of the deterioration in the financial health, right?
Yes.
Okay. But that was there last year also, right? It continues to deteriorate. Any other thoughts? Please.
Issues, that's why customers are left, so...
Quality issues, okay?
Quality issues.
Okay, okay. नहीं गोइंग कंसर्न है ठीक है यार मैं पेरेंट हूँ मैं इसको सपोर्ट लेटर दे दूंगा ठीक है यार गोइंग कंसर्न
So
20% of my revenue, let's say. Okay.
So in this case, as a principal auditor, one should not blindly rely on the subsidiary auditor's work.
Sure.
They should do a direct procedures on the entity and should also understand the reason behind the continuous reduction in the sales volume and the margin and also the loss of the key customers. And whether and what are the other risks which may crop up because of this reason, and it may also lead to a going concern assumption issue in case of the subsidiary.
Okay. Okay.
So,
okay. I think broadly right. Sir, my customers are going away, right? There are fixed costs, rental costs going on, warehouse costs going on, electricity costs going on, depreciation is up, right? So that's the reason, let's say. Yeah, yeah, yeah. Cash cost is going on. I think you put that very, very aptly. It is not a blind reliance. We need to use some kind of a procedures or some kind of a rigor to do an act or before using the work of someone else, right? It is not a blind or a mechanical kind of a reliance what we need to, look at. Possibly, I think a few of the consideration that you mentioned, that if the principal auditor would also question the component management or worked more closely with the other auditor, possibly there could have been other risks, right, which might be important from a consolidated financial statement standpoint, right? So again, group audit, as I said, there is an expectation that both the sets of auditors work together, and finally, there is an outcome which is owned by the principal auditor. And I'm sure you would be aware of the NFRA circular on group audits, which clarifies the intent and the way we need to look at a complex kind of a group audit scenario. Yeah. Okay. What does the NFRA sample strategy document ultimately advocates? We discussed a couple of them, but few learning points and few good points I felt that I would like to bring to everybody's attention. These audit strategy, including the NFRA's audit strategy document, should be customized for that particular audit. It is not a fixed kind of a format. Please customize your strategies and customize your document accordingly. The document also highlights how do you link the outcome of this strategy with your audit risk, right? Let's say in the example of where there was a falling revenue or a loss of customer, does this mean there is an additional risk that we need to identify? So it is not just a high-level kind of a discussion. It ultimately has to percolate down to a risk of material misstatement. Significant risks. The document very clearly and robustly focuses on the ways to mitigate fraud, ways to assess the going concern risks. Again, a very clear advocacy on clear and crystal clear documentation. The documentation, if you would look at the explanation also in that document, it's very categoric to say what happened in that particular entity. Those are not just broad level kind of a statements. What we spoke, with whom we spoke, what did he tell me, and ultimately what is my preliminary audit strategy. The documentation, the language is expected to be very clear and unambiguous. Yep. So wrap up. My dear friend Sally, please avoid SALY, same as last year. Challenge, don't accept at the inception itself. Please challenge, right? Don't follow instinct. ये तो ठीक ही लग रहा है, right? Please follow the judgment framework. There is, sir also mentioned about professional skepticism. There is also a requirement to apply professional judgment, right? Please ask probing questions. It is not, is this happens? Yes. It can't be a yes or no answer. It has to, you have to probe more. Try to frame your questions in such a manner that it leads to many more questions. Yep. Don't just follow instinct. Group audits continues to be the principal auditor's responsibility. It can't be, a delegated kind of a responsibility. Documentation. Please do not document at the end of the audit. Document as you go, right? It also brings very clear clarity to the engagement teams. It also keeps the engagement partner posted on where we are. So if there are certain discussions, difficult discussions that the engagement partner would need to have, possibly the timely documentation would be able to have a much more easier conversation. Yeah. Yeah, that's all I had. Any questions?
Thank you, sir. A big round of applause, please.
Thank you.
Sir has explained the practical relevance and importance of audit strategy with real-time examples. We face these challenges in our regular audit exercise, and we are now take one more step, documentation, as we all know, where audit documentation will lead to. May I now request Shyam Tong, sir, Executive Director, NFRA, to present a memento to our speaker. I'll also request the co-chairperson, Roshan Bajaj, to please come and facilitate on behalf of ACA. Thank you, sir. Thank you. We will now break for a short tea break. I'll request everyone to kindly assemble in the hall by 12:20. Thank you.